In today's session of Visual JForex, we'll be continuing our work with the indicator Stochastic Momentum Index SMI. Let's get started. This is the Visual JForex board which has been developed by the Dukascopy Bank SA so that we can design and develop the algorithm in an easy way. In the prior session, these blocks were arranged to get the instrument subscription done, and after that, the position amount was defined at 0. These SMI blocks are of hourly time frame with a different lookback period of 1 and 2 respectively to get the data on the momentum which has been for the underlying instrument. And to look at the price volatility, we are also using the get historical candles of 4, and last hourly candle is also going to be used along with these two 10-second candles. And these calculations were carried out to define certain values. This is for 20 pips, as we want to make sure that there is enough volatility. So we will be calculating the difference between the high and the low over last 4 hours, and then we will compare that to this output value. And this value output of OCDV is going to be used to compare the last hour's closing and the opening difference, and it should be more than 7 pips. So this calculation was done to define that. Now I will give you a brief refresher on the logic behind the algorithm. There is the Euro USD chart, which I will change to hourly time frame. Okay, we want to go for the buy trade as and when we see the crossover happening in the SMI. We want the SMI value to cross above the signal value, and it should be in the positive territory and preferably above 20. So what we are going to do is define the SMI output values in such a manner that in the last hour the SMI output has crossed uh, above 0, or there are two ways to go about it. We can use lookback period of 1 and 2. So I think it will be better if we use the penultimate candles data, and at that point in time the SMI value should have been above 0 but below 20, and in last hour the SMI crosses above the signal value, and of course here also the value should remain above 0, and it can go above 20. We will not place the condition on the upper side, but for the penultimate hour the defined output value should be within the band of 0 to 20, and that's the only output band within which the trade can be executed. So fairly simple. Now to define this, we will have to get the if-else blocks, and also we will need to carry out some calculations to look at the actual difference between the last 4 hours high and the low value, and also for last hour candle 18's closing and the opening price. Its closing value will need to be higher than the opening value by more than 7 pips, and in case of this cluster of 4 candles, the HLC's high and the low difference should be more than 20 pips. So for that we will carry out the calculation first. We will need 2 of these blocks. A1 minus A2. After that, the candle 18's close should be higher than the opening price. So we need to now take the difference of this auto created variable. Here is candle 18. A1 minus A2. Now let's get the conditions defined for the execution of the trade, and we will need to compare the output values, the SMI 12 and signal 12 with SMI 16 and signal 16. Firstly, we will need the SMI 16 and signal 16 values to be above 0 and below 20. It has look back period of 2, and the output should be within the predefined limits. First input greater than second input. And SMI 16 and signal 16 should also be below 20. First input less than second input. Same should hold for signal 16 also. First input less than second input. And then we have to look at the crossover, and here the SMI value should have been below signal value, and only in the last hour it should cross above the signal value. So we will need the SMI to be lower than signal 16. First input less than second input, SMI 16 is less than signal 16. And after that, we will See what has happened in the last hour. And in the last hour, SMI should have crossed above signal. So now we will need SMI 12 to be greater than SMI signals 12. First input greater than second input, and of course the condition that SMI and signal value should remain above 0. First input greater than second input in both of these blocks. And then we will consider the price action. Whether there was enough volatility or not is going to be very important. And to make sure that enough volatility was there, we will consider this output and compare it to the predefined values. HLD1 needs to be greater than HLDV. And this output OCBD needs to be greater than OCDV. Okay. With these conditions in place, all we need to do is place the order as and when we see the price starts to rise above the last hour's closing price. So now we need to compare candle 18, candle 20 and candle 21's closing prices. We are going to need two of these zip blocks, and one of the input will be the same. That will be candle 18's closing value. Candle 20's close should have been greater than candle 18 close, whereas candle 21, which has a look back period of 2, should have closed lower. Okay, after that we will be placing the order, which will be open at market. So whatever is the market price, execution will take place on that price. First input less than second input. Okay, we will now arrange the blocks, and after that we will need to define the input values for these trade command block. We will need multiple action first. We have needed till 12 if else blocks, and after that I'll join this and multiple action to the last block of calculation. Okay. Now coming to the input parameters for this open market block. Default instrument will remain as it is. Euro USD trade amount I will change to 0.1 million. Slippage will be 2 pips. And stop loss and take profit, since we are working on the hourly time horizon, I think a combination of 15 pips and 30 pips should be good enough. So this time around we will keep these values static. Most of the time we make it dynamic, and if you want to define it in a dynamic way, you can refer to other sessions done in this series using other indicator blocks. But I think this combination should hold well, and whether it works or not, you can always get the idea after doing the testing on historical data on Visual JForex platform. So I would suggest that you try out this setup, and we are done with the buy side. I will color code this to see if the trade flow is going till the very end. Yes, it is. It's working, I guess. Of course, we will need to test it to be sure, but we don't really have the time. So once you are done with the setup, I would recommend that you carry out the testing first and see what kind of results you get. And this algorithm is of course not complete. The sell side remains to be defined, which will be done in the next session. So that's all for this session. Thank you all for joining in. Do subscribe to the Dukascopy webinar channel to stay updated on the market developments. See you next time. Then goodbye.